Hello, good morning, everyone. We are starting our fifth webinar from the series of the webinars for Central Europe. Welcome. My name is Eva Konchal, and I'm a CE manager at EVPA. And together with our partners, we are preparing the series of webinars. Before we go into the actual session with our speakers, I want to give you a couple of technical information. On your screen, you see a control panel on the right, and you can, zoom in, zoom out, but you can also place questions for our participants, and at the end, we will be able to address those questions. The webinar is recorded, which means that if some of you cannot stay till the end, you can always go to the EVPA website and listen to it. Just few introductory words about the series. This is our fifth webinar. We started this last year, in the absence of opportunities to meet physically. And we started this series with an idea that we want to promote, we want to bring this topic of social investment into Central Europe and bring more audience and more learning opportunities for different stakeholders from Central Europe. But as we see, as this is our fifth webinar, we see actually that we are getting a very international audience in those webinars, not just people from Central Europe, but actually even from outside Europe as well. So I really want to thank Marta Lesiewska from Inspired, who will be also moderating today's discussions, Staszek Kastory from Firley and Kastory for being with us and also supporting us in organizing the series, and the Polish Private Equity and Venture Capital Association that has been helping us in promoting the series. So today, actually, we have really exciting topic, I think, serious topic, as usually we associate financial institutions with seriousness, and really a great panel of speakers, the great examples to share. So we will start today with Włodzimierz Grudziński. I'm really happy that we have a representative from Poland as well, and Włodek is wearing many hats in the financial industry. He has been leading one of the first banks, actually the first bank in Poland that was providing different financial products to social enterprises and social economy players. He's been also involved in setting up a first ethical bank in Central Europe. I think this is the work still in progress. And also a vice president of the Federation of the Ethical and Alternative Banks and Financiers, FEBEA. So he will be our first speaker, actually in an interview with Marta. Then we will have Pedro Sacia Santos, who is the chairman of FEBEA, of the Federation of the Ethical and Alternative Banks and Financiers, and he's also very much involved in the Spanish Solidarity Economy Network. Another person, really happy to have also with us Johan Heath from Erste Group. Johan will be sharing experiences of Erste Bank, working very strongly in Central Europe as well, on social banking, on the activities of the bank. And also, I think, as I remember from the slides, some of your activities related also to COVID. And then last but not least, I hope also Eric Boekens from ABN Amro will join us at the as a third speaker. Eric is actually a director of social impact investments at ABN Amro. I think he's been working in impact investment space for the last 10-15 years, and really a key person in the bank to put the bank on this path of impact investing and convincing, building convincing his coworkers, his team at the bank, that really banks and financial institutions have a role to play in this social enterprise space, and the financial institutions should be developing also innovative financial instruments. So I'm really happy to have such a great group here, and without further ado, I will give the floor to Marta so that you can start the conversation and give the base, let's say the foundations for the rest of the meeting. Thank you. Marcus, the floor is yours.
Thank you, Eva. Thank you for the warm introduction. And we have a lot of exciting guests today. We have a lot of insights and inspirations coming. So as refer to the classics, I hope it will be really a profitable hour. First, let me start to set the stage a little bit. In all serious investing for impact, we were introducing very broad topics like what is responsible investing. We were covering topics like implementation of SDGs into impact and responsible investing. But we were covering also more detailed sectors like a venture capital approach to impact investing in last month, 2 months ago. So today we want to focus solely on banks and banking sector, which goes through intensive changes. And those changes were already present here before the COVID, and actually, especially since last financial crisis, we can see the intensification of the challenges in banking sector. A constant flow of new regulations around the world are bringing definitely the compliance challenges to banks. And probably Włodzimierz will talk more a little bit about it, because we have, as we spoken before the webinar, there is a lot of observation from his experience. Digitalization also speeds up the sectoral challenges and creates opportunities, risk, and also new alternative solutions to well-established way of operations. And in terms of responsibility, in the last few years, banks were expected to follow voluntary guidelines. So some of them, and today we have examples of those banks also as well, they were complying and signing UN principles for responsible banking. They were trying to follow Task Force on Climate-related financial disclosures. They were trying to implement Equator principles. But now we are facing the situation where regulations are following the pioneers, especially in the EU. We have Sustainable Finance Disclosure Regulation, we have taxonomy. And also, I know that some of our guests are involved in works and on those EU guidelines, so we will touch on this today, what is coming. We have eco-label coming for retail investment products. So those changes are perceived as challenge, but also a chance for CE market, where actually it is expected that impact of those regulations will be more significant in the Central and Eastern Europe than in Western Europe, which is a little bit more advanced in terms of sustainable and responsible investing. So now we are facing a lot of situations. Still, responsible banking in the CE region is perceived as CSR reporting or products that are supporting green technologies. However, it's much more than that. On the right side of the screen, we can see the 6 principles of responsible banking, and we can see that it covers much more comprehensive approach. So let us maybe start from the very beginning, and let me ask Mr. Grudziński and invite for the conversation, the opening conversation today. Actually, what does it mean, responsible banking? How banks fit into sustainable and impact investing trend?
Yes, we know today that sustainability is the most important trend for the first half of our century. So no one now is talking about responsible banking, because responsible banking, it was what you said. It recent race, there is a bigger emphasis on activities that could be shortly called CSR. It was mainly charitable activity, supporting culture, education, sport, other social activities. Later, the bankers started to give the voluntary savings. That was the way how the banks reacted for changes in the society. After there is some elements of care for natural environment have been added, but it was, however, takes completely outside the normal activities of the bank. This was done by separate CSR, PR teams. There was, in majority of, let's call it mainstream banks, there was a wall separating them from the normal activity, from the risk departments, marketing in the sense of products, etc., etc. Only some of them included the concept of impact investing in their business policy. I have to mention that there are a group of banks which are acting differently. Some of them are affiliated in FEBEA. They're from the very beginning, they integrated environmental, social, and governance goals in their business strategy. Even no one was thought about the ESG, sustainability, etc., etc. But the changes are also in the mainstream sector. That's a general question. What does it mean, responsible banking, sustainable banking? Generally speaking, banks will become more and more responsible for what their clients do with their finance. Now it's a narrowing. It's money laundering, financing of terrorism, etc., etc. But currently, banks have to concern of the effects of borrowers' activities in the field of ecology, social effects, and the way they operate, the governance. This is this 3 letters ESG. They have to take into account ESG factors in their lending activities, measure them as much as possible, shape the assets according to this additional criteria. It will be a great revolution in the way how banks will work. There will be significant changes for people from asset and liability management, from risk, from customer relations, marketing. It will influence the strategy. And I think will change the business model. There will be the need to hire and train experts on new fields. I can say that banks will have to look at the economy in a more holistic way, taking into account also the social conditions much more, and all what is happening in the society.
And could you, because you actually mentioned that like we are going from this transition from CSR as bank as a company to actually being responsible for how do they invest money, what they do with the money. Could you maybe from your experience, like you know the banking sector in breadth and depth, what are the main challenges and maybe change accelerators in the CEE region that are supporting the transition to more green or sustainable economy in the banking sector? What they are actually facing? Because we agreed at the beginning of this webinar, and this is why this webinar is actually taking place, that this revolution is ongoing revolution. It happens now, but there are different challenges actually also referring to that. It's not that they must comply with the new rules, but there are of course challenges, and some of the countries, some of the banks, they are more advanced on their way, and some of them are on the very beginning of the journey. There is a difference between Western Europe and Central Eastern Europe. How could you please maybe share your thoughts about the change accelerators and the challenges the banking sector is facing on this revolution?
First, there are the factors which influence all the banks in all the European Union. There are the influence of regulators. The second is changing the opinion of society. It means the customer expectation of the role of the bank. The third is the view and beliefs of bank employees. That's, I think it's also important. And the fourth, maybe in the future, the most important, this is the market demand. Influence of regulators, it's for all. And I think it was to say that after the, first of all, the fight against climate change must not bypass the financial sector. Financial sector is responsible for financing the dirty economy by years. After the financial crisis, banks in the Western world lost their reputation enormously and lost their trust to a great extent. In many opinions, reviews, media, movies, books, they have been placed on the dark side of the force. They want to change this. But also regulators also got in during the financial crisis. So the reaction is endless series of regulatory changes. All European institutions regulating and supervising the financial market produce several new regulations each year. Now we have the regulation related to ESG and sustainable finance. I think it's the biggest challenge to all the banks, but also especially banks in CE region, where the pressure from the public opinion and from the customers are less. So there is a challenge to do it, to fulfill the regulation in the way which influence in the good sense the strategy and the business model. Not as sometimes banks are doing with different kinds of regulation, just to fill the reports, to fill the points in the report and to have done the bureaucratic job. I think so. The regulators will press all. The pressure of public opinion and customers will be less in the countries in our region, I think. I think the important thing is to fulfill the regulation. You have to measure different factors. The taxonomy will describe it, maybe later a few words about it, and where the data are. The data are in our customer. They should give us the information. I think the entrepreneurs in our region are less convinced to this time of activity. That's a big risk that they will treat it as another bureaucratic burden, and the banks will have a problem to really look what is the real impact of the money they are lending. But another thing is this internal relationship. I don't know how it is in other countries, but I can observe in Poland that the banks lost the big part of their prestige and are no longer a very attractive choice for young people looking for a job. there is a big fluctuation of the staff in the banks, which is very annoying and costly. Therefore, banks as employers must show their social usefulness in the most important challenges and to improve their governance in relation with the company. But what will be a biggest accelerator? It will be the market demand. There will be a big market demand combined with high public financing. All the money from reconstruction fund or the European Union financial perspective are directed to implement the new strategy concerning also the sustainable financing. So I think it will be the biggest accelerator. The banks, we have two kinds of banks. We have the banks in CEE, which are subsidiaries of the international financial institutions. So they will follow the rules, the trends, the regulations, which are planned and implemented in the headquarters. But there are plenty of local banks in different countries. I think in Poland, for example, there will be a big chance for Polish cooperative banks. We have more than 500 of them because they have very close relation with customers. If they could use it to work with the customers for sustainable change of their business, it will be a big chance.
Yeah, yeah. So let's maybe stop here for a moment. We have, as you mentioned, like also those local banks and the global banks, and the huge actually chance that is connected to recovery funds, and hopefully, or maybe we will not stop on implementing the compliance rules and creating ESG funds and actually tracking the ESG metrics on the customers and asset management side. But here we can also see the different opportunities that are at the bank's disposal. And we can see here the graph that is like EVPA flagship spectrum, and it's actually adjusted for banks. So we can here see the different products and solutions that support sustainable and responsible investing. We can see here the solutions such as business and personal microfinance. I think the tool that should be also used by the local and those small banks that are really close to their communities. Also tools to help lending and support lending to social purpose organizations. So the customers that are not really considered as customers in very often yet. Also social impact bonds or impact investing fund and loans. Do you think that like those products are missing at the moment in the CE region, or what would you suggest to the other people on the other side of the screen actually who are responsible for ESG and strategy in their banks in terms of their product offer, how it should evolve in the next years? Do we have actually those kinds of solutions at the moment in the market, or there is still an opportunity to be used?
I know that there are the first green bonds in some banks, financing focused on social impact, both loans, credits, and capital investment. There are mainly, not in all cases, but mainly products transferred from the headquarters of international financial institutions. But that's just the beginning, and rather is treated as a prototype. But having this market demand and the big stream of money, banks will, in big parts, will distribute this money. I'm sure that there will be many other products, green mortgage loans, green collective individual transport loans, sustainable loans, because it's not very difficult to create this kind of product, giving the label green if the goal for investment or for using the money will be well described. Of course, it's a very big educational role for banks who is working with the customers. I think it will change much the relationship between the customers and the banks. I think what is important is not to focus only on the ecological aspects. It will be the easiest products. I think it's very important to treat seriously financing with the social impact. I think it is very especially important in today's pandemic and hopefully soon post-pandemic times. Financing economically healthy and socially responsible entities should be one of the goals, because not only climate problems await us, growing exclusion of group of citizens, increasing property inequalities, changes in the labor market due to the energy transformation, migration, are the problems which are now or just outside the door. Ethical financing is one that takes into account all elements of SDG. According to what I have, my message to the people shaping the bank strategies, I have two suggestions. First, I think for our region, it has to be focused on the biggest subject. It means financing the transformation. Not only the green investments, but transformation of businesses to sustainable way. Because the majority of customers will need this type of financing. And I said it will be the biggest market, but it has to be incorporated into the risk assessment and the relationship of customers. I think maybe it worth to develop consultancy services for such transformation processes. The second is following the examples of banks from FEBEA. I think it is worth breaking down the wall separating deposit and credit customers. Some people call it not a wall, but mirror. Each group of customers look for the mirror. I think it's worth to give depositors the opportunity to choose which activities from the area that the bank finances want to support with their money. Ecological agriculture, renewable energy, activities with social impact. This will give an additional bond with customers and build lighting long-term relationship. The good custom which some banks of FEBEA are doing is, with consent of borrowers, publish a list of these companies so that everyone can know how their money works. I know that in the old Europe, let's say, countries, more and more customers want to know what the banks are doing with their money. This trend will go very fast to the other parts of Europe.
Great, and thank you for those two tips and many more insights. And I think it's a perfect and very natural moment because you actually mentioned and introduced FEBEA. So now I would like to give the virtual stage to Pedro Sasia from European Federation of Ethical and Alternative Banks and Financiers. Could you please, tell first of all and introduce a little bit FBA to our audience, and also maybe build on that was actually mentioned in the moment about solutions that ethical and banks that are in your network are implementing already. Please, the stage is yours.
Yes, thanks very much, Marta. Thanks, everyone. Thanks, CBBA and the rest of the partners for this opportunity to present the Federation and what is such a thing as the space of the ethical finances. FBA is, as its name indicates, the Federation of Ethical and Alternative Banks and Financiers. We are a group of financial experiences. We have banks, but not only. We have also financial institutions, some foundations, etc., etc. I'm not going to stop very much in the numbers. We can go through the next slide, just giving a picture of the numbers. We are 30 members from 15 countries in Europe, over 700 customers, over 30 billion in deposits, more than 18 billion in loans. Well, some numbers that indicates one of the characteristics of these banks and the Federation. We are small. We are small compared with the big players. That is a reality. We see that is a natural consequence of our approach to finances that preserves rooting in the territory, local expertise, etc., etc. So our size is different. We are not, and we don't have the same challenges as the big players, I have to say. We have repeated many times in the different European institutions that one size does not fit all. We have to be considered specific, but we don't say that just as a self-proclaim. There are many documents and many analyses in the European institution that acknowledges the advantage of a biodiversity in the financial ecosystem. This is the term they use, outlining that some small different banks with different characteristics that are specialized in certain sectors are very much welcomed, and in this progressive process of condensation, of having big players, on having I will talk about that after, a big influence of the fintech and the big data, etc., in the relations between the bank and the customer. This niche and these small banks are very much welcomed. We have a charter. You can see that in the presentation. I would like to outline, stopping in this slide, that in our charter we declare as a compromise and engagement with the rest of the society, we declare many characteristics that are very much coincident with, for example, the so-called Charter of Investors for Impact and some other declarations that put the focus on social impact, mainly in their investment. You can find here ideas linked with networking, transparency, participation, attendance to the priority of the social, environmental impact, and the governance style. I will try to explain during this short presentation why we are so much dedicated to preserve certain principles, values, and characteristics as our footprint, our fingerprint, our way of understanding what is finance and how finance should play their role in our society. If we move to next slide, the next one, please. I ask excuses for the you know the question, so sharp question. There is a fact. I was here in Blodek. I know Blodek very much, and I have gone through the different texts and forewords of these different series of webinars that you are organizing, and I always have the same question when I hear about what companies should do, what banks should do, how politicians should behave, etc., etc., etc. We don't pay very much attention to the question of motivation and incentives. Why should we? In fact, philosophers say that this is the basic ethical question. Why should we be socially oriented better than just profit oriented, or just looking for maximization of profit and distributing it among different the investors or the owners or whatever? Why should we attend to different things? And here, when we move into finances, we find that social impact investment entail many elements that are out of the market, of the actual market. We have to admit that. In fact, there was a presentation, a very nice presentation in my university a couple of years ago, just before the pandemic, and the former vice president of the World Bank was speaking about, well, investing to support or to contribute to the Sustainable Development Goals, the 2030 plan, etc., etc. He was saying sharply that private investment is not very much interested in that today, because conditions are not so advantageous as the market conditions you can find in some other kinds of investments. So why should we? And we have to go back to some of the ideas that Blodek was indicating, and some of the key elements that are behind the justification of finance, ethical finance, as they are. When we ask ourselves why should we find that the responsibility of the financial institutions can not only be acknowledged or directed to the institutions themselves, to their managers, the people responsible of the strategies, the workers, etc. Orienting finances at with a positive service to our society is responsibility of the whole society. And there is a phrase in the forewords you named in the convocation of this seminar, which is I think is quite interesting. You say that mobilization of different stakeholders is mandatory to orient banks and financiers in a certain direction. This is important because there is, sorry for the terms, but it's quite military. But there is a fight to be done. It's the fight of competitiveness. Everybody knows that. But what about including in the recognition of a competitive company, including some elements that are not just price, service, etc. If you include some other things, this is not so strange. This has happened, is happening in many countries. If a company does not respect the gender perspective, it's out of the market. Never mind the price, never mind the service, never mind the characteristic, never mind the marketing campaigns. If you are a dirty company, contaminating, etc. In many countries, you are out of the market. How do we try to enforce this way of acting? Answering to this question and some other questions is the key element that explains what ethical finances are. It's not just a picture of characteristics. We have some characteristics. The compensation schemes of the high directives are controlled. We have a strong risk, environmental, social, and governance analysis for the credit requests. We have a cooperative nature, not always cooperative juridical form, but a cooperative nature with diffuse capital trying to participate in the decision-making processes, etc. But this is not enough. The best way of understanding the ethical finances is what we can call the genealogy of these experiences. Understanding how they were created, how are they established, and how they are governed today, you can understand very much who manages these processes, which are their motivations, how is the governance model, which priorities will lead the future evolution, what model of citizen consumer do they contribute or create, etc., etc. So I think that this is the main element that has to be considered when you find ethical finances as a reasonable, at least reasonable. I wouldn't say that the only possible answer this is, but at least reasonable proposal to be considered if we want to move finances as a necessary agent in social transformation under the horizon of justice. Don't forget that, because sustainability and justice has to be always linked. You can think on a perfectly sustainable world being perfectly unfair. You only have to expel people there is no place for them. So sustainability and justice has to be linked. And our world today does not sustain. It's not a challenge for the future. So be careful, we have to be careful with that. And this is one of the main reasons why we have advocate with the European Commission and the different institutions. When we are asked, there has been a consultation on what is such a thing as sustainable finances, and we just made some observations, and we were talking about precisely that. Consider that social elements are very important. We understand that when you define a taxonomy, impact is statistically complicated, so you need a methodology, you need numbers, it has to be statistically robust, and social impact is not so easy to measure. We understand that, but efforts have to be made, because if you don't consider social effects, even climate change is going to be without the deep meaning it has, because the climate change effects are also social, for example. It is interesting, there are 4 slides, my colleague is moving around them now. There was a concept used by OECD in a report. It's called the impact imperative, distributed in 4 areas: the innovation imperative, the policy imperative, the financing imperative, the data imperative. And when you describe these imperatives, you find many elements that are precisely under the basic principles and values that the ethical finance has. When we talk about networking, when we talk about seek the support of civil society, when we talk about show success stories, speak, try to involve in cultural changes in our society, engage as financiers not only financially, this is important, banks, mainly banks, but financial institutions, any economic agents are much more than economic agents just dialoguing with the rest of the society, saying sell or not sell. That is the question. It's much more than that. The companies, the corporations, every company has a huge influence in culture, in regulations, in many elements, and the engagement has to be global. That is why ethical finance is one of those elements that we insist is engaging with the citizenship in cultural change. Having said so, and just to finish this brief presentation, there are some links to some documents in the presentation. There are some examples what we have been doing during the pandemic. It's interesting to stress that we have a collection of the different experiences we have been putting in place. It's interesting to know that in many countries, the behavior of the ethical finances, the members of FEBEA, has gone much farther than the regulation, much farther than the regulation. We have acknowledged moratories for non-performing loans unless or independently that the regulation were saying so. We have been proactive in many of those initiatives. FEBEA itself as a federation, we have elaborated in dossier with all this information. You have the link in there. We have been interacting with the DG Employment and DG Growth, trying to find some measures for COVID response. We have been a letter, it has been answered by Commissioner Smith. We have a dialogue, an open dialogue with him on some measures to be implemented, etc., etc. So this is a very brief explanation of what FEBEA is, why we are that way. I insist this is not a picture, a list of characteristics. It's much more than that. It's a history of banks and financiers that are in society in a particular way. The motivation, the incentives are those. And I have put there in the presentation also a list of the impact investing initiatives that are run by many members of FEBEA also, just because I suppose that the audience is interested in that also. Thanks very much, Marta.
Thank you very much, Pedro. I actually know that that's why we are supporting our audience with the presentation, so they have time to click the links and they can follow the links. So thank you very much for all the guidelines and the questions that everyone should ask themselves if they want to go beyond regulations, beyond climate, and they want to actually see the bigger picture of social and environmental aspect of the transition that is going on right now. Now let's move maybe to more particular organizational level, and let's see examples from Erste Group Bank. Our guest, Johan Hepp, welcome. It's nice to have you here, and the floor is yours.
Thanks a lot, Marta. How much time do I have actually now? Okay, so thanks a lot. I hope everyone can hear me and see me. I would like first to just outline where I am and we are coming from. So please go to the first slide. I'm working for the social banking department, which is a department within Erste Group. Next slide, please. And the bank actually was founded already more than 200 years ago, so in 1819. We are like a savings bank. We are active in 7 markets in Central and Eastern Europe. And what you can see is actually that we are dealing with real clients, I would call it. So we have more than 16 million clients. and we have more than 2,000 branches. So actually we are in very close contact to our base, let's say. In terms of social banking, we started to have activities in that direction already 15 years ago. So actually when 2006 we created the so-called Zweite Sparkasse, second savings bank, which was set up because a lot of actually clients or former clients in Austria were not able to open a bank account. So we founded based on volunteers separate bank, providing these accounts to people to financially include them, having the basic right to a savings account. Some years later, and you can see here actually the region we're active in, and you can see actually that we saw that there's a lot of things, a lot of challenges which are affecting people living in our region. So just to name a number, there are approximately 15 million people who are at risk of poverty in that region. And in each of the countries, of course, the issues, challenges are in some way different, bigger or smaller. But just to name, for example, that in many countries, the housing topic's a huge one. So the affordable housing, living in overcrowded households, cannot cover unexpected expenses. So we saw that there's a huge need to do more than we did in the past. So that's why also we created the social banking unit. And just to understand, we have a social banking unit in each of the countries. So each country's Erste Bank has its own social banking unit. Next slide, please. And you can see here that actually the focus last years, but even more now, is very much on the environmental topic. But what we want to stress actually is that we should not forget about the social aspect. So actually people need to cover, let's say, first their social needs in order to be able actually to think ahead and be in a comfortable position to think also about the green side. So it's not always only social or green, so it's always the combination, and we should not need to forget about the social side as well in the upcoming years. Next slide, please. So actually, like social banking is the S, of course, in the ESG. So planet is important, but as well the people. So let's not forget about that. Next slide, please. So I'm going a little bit quicker through the slides to focus on actually the real life examples in terms of projects which we do. Just to kind of give you a brief overview, what is social banking actually supporting or offering? So we have 4 different segments, we call them. The first ones are starting entrepreneurs. So actually here the impact is about creating new jobs. The second segment are microfinance businesses. So these are businesses which are in the rural areas, and here it's also about creating, preserving jobs. So these could be farmers, for example, and we do that mainly in Romania. The third segment are social organizations, NGOs, social entrepreneurs, and here our focus is that we enable them to expand their social impact. And the fourth segment are, we call them like private individuals, people with low income, people with having financial difficulties. And here actually we would like to, for example, to get them out of over-indebtedness, or we provide affordable housing, affordable living opportunities. And we don't provide only loans and accounts. It's always combined with non-financial support. So it's kind of business training, capacity building, and financial education. Next slide, please. And to actually also show you how many loans or the volumes we provided since social banking is active within Erste Group. So you can see that we provided more than 370 million euros in loans. And out of the whole loan portfolio, approximately a quarter, so 25%, 24% is dedicated to social organizations and social entrepreneurs. And we financed, I would say, and these are like not the newest numbers. So for the next report, we will definitely have more than 15,000 client financed. Next slide, please. And And next slide, please, because these are just the 2020 highlights. And I would like to rather focus on next slide, please, on the slide of what critical challenges do we see now in the kind of COVID times, but also, of course, post-COVID times. And in the following slides, I will then also just name a few examples how we approach offering our social banking services. So one topic is definitely about jobs and upskilling. So how to get back jobs actually, and how to upskill people who lost their jobs. Second challenge we see critical is affordable housing. Housing getting more expensive, more unaffordable, and pushing people outside of the community, I would say, social exclusion. Then providing social services. This is an ongoing topic we see. And then again, also health and care. So of course, with aging societies and maybe also the lack of state funding, this topic is also like an ongoing topic. Next slide, please. Here I would like just to mention and show that due to the COVID crisis or COVID situation, together with the Erste Foundation, we created an interest-free loan facility. So actually, we, like the local banks, the social bankers, are providing loans to NGOs, to social entrepreneurs who had difficulties in terms of liquidity due to closing their businesses, closing their activities, shutdowns. And the beauty here is actually that we provide loans, and Erste Foundation, which is the major shareholder of the bank, actually is paying back the interest for 1 year. And in that way, we wanted to kind of support in an extra effort the social sector. Second example is the so-called Social Housing Fund in Slovakia, where we as a bank, together with Slovak Investment Holding and support of the EU, creating a social housing fund where a local social business which was created is buying flats and is renting these flats to social organizations who are selecting people with difficulties, also homeless people, and providing social care services. And because we don't add up any kind of profit margins here, so it's kind of self-coverage approach. The people can rent for a very good price these apartments and can get back to life and also away from the street. So this is something what we're trying out now in Slovakia. There's a great pilot working here. Next slide, please. We have in Slovakia a second project which is running already for some years. It's a housing project for the Roma community in Slovakia. And the beauty here is actually then again, together with a local NGO, interested people from the Roma community can need to save up to 12 months to show actually they can put away money. And after these 12 months, with the money they saved plus a loan from the local bank, they can buy a plot. So before they were living in, let's say, let's call it like a slum or unofficial housing, they can buy a plot, and together with the NGO, they can build in their own house. So this is also in a term like sustainable, because people building their own houses, buying their own plot, and being then official members of the society is a great motivational factor. Next slide, please. And next slide is actually showing the scale of the Roma housing. So far, we achieved to finish 25 houses. So it's not like in thousands. We believe it could be upscaled a lot. But this is kind of dependent, of course, on local partners, political will, and support also, of course, from supranational organizations. So there's a huge potential, and yeah, so we wanted to show that it works or not, how it could work, let's say. Then we created, together with Erste Foundation and a service provider called Atempo in Austria, our first social impact bond, our first Erste Social Finance Impact Bond. And this is actually was set up by a call from the Federal Ministry of Social Affairs in Austria, where they want to tackle the topic of the digitalization, the challenges and the opportunities. And we provide actually or select mothers or women who were taking care of family members who are looking for a job but being very low skilled, not finding a job. We provide them with online training, so basic job training to take care of people with disabilities. In that way, they can still be flexible to take care of their children, but also to earn money. And on the disability side, actually, there were a lot of people who don't find high quality assistant offers. So we there's a platform which is also bringing together these women being trained and people with disabilities who look for an assistant. And it's currently running, so it still lasts for some years to come, and then I can also share more details on that. Next slide, please. What we are also currently working on is to set up like a social finance instrument. It's about quasi-equity. As we could see, providing loans for some NGOs or social entrepreneurs, we cannot provide these loans as their capital base is too low. So actually, we saw that there is a funding gap, and we are now setting up this instrument to be able to take more risks to fill this gap together with their own funds, the NGO funds, and then being able to provide loans by the bank. And this is in a very early stage, and the window is open for applications, and we'll see, and we will learn a lot. So we're looking forward how this new offer is perceived in our region. Next slide, please. I myself, I'm like focusing on the social side, but as the green side is also part of today, I collected some information which is covered by the other side of the bank, let's say. So in terms of green financing, I just wanted to share that Erste Group just announced to stop coal financing by 2030. And in Western Europe, maybe this is like old news, but in our region, actually, coal is a very relevant factor, so a very relevant energy source also. So this would support definitely the transition to more sustainable energy, let's say, production. And also to support it, Erste Group was setting up the new responsible financing policy, where actually this focus, this goal is kind of also written inside, and we will not finance coal asset specific investments on longer term. Regarding sustainability, like for many years already, Erste in Erste Group is kind of offering with its Erste Asset Management sustainable specific funds. So this is something what is running for many years, including having ethics advisory boards in cooperation with internal, external specialists. Next slide, please, and that's the last slide. What was introduced also now is actually a so-called global equity rating report. So actually, companies get now an ESG profile from our analysts. So actually, this profile shows companies how they're performing compared to the global sector, and there are, like, of course, some criteria which are defined to measure that, and we believe that in showing and making it more transparent, we can also move and show potential clients or investors the kind of the sustainable side as well, to kind of influence also the behavior of investors. So all from my side, many topics, and open, of course, always for any questions then later on. Thanks.
Yes, thank you, Johan, very much. A lot of food for thought, and a lot of very practical examples and cases. So I'm sure that some questions will follow on that. Quick reminder to those who are listening to us, you can submit the questions in the questions section on your right. And now, last but not least, Eric Buckens, who somehow is named me, but it's definitely not me. Welcome. I'm really glad you managed to join us today. Director of Social Impact Funds at IBN Amro. Eric, the floor is yours at the moment.
Hello, can you hear me?
Yes, we can.
Okay.
Go ahead.
Good. Well, thanks, Marta, for the introduction, and I'm quite happy and honored to bear your name actually for this short time, especially since the SDG number 5, equal rights for male and female. It's quite nice to have a female name for a while. Good. Johan, thank you also for your inspiring presentation again. Somehow, because of Marta and Eva, also who we don't see, but I know is there, I keep on being in panels and on seminars with you and colleagues from Erste Bank in Vienna and ones in Warsaw, and so it's always very interesting to hear you and your colleagues about the projects you're doing. Very interesting.
Because there are
Marta,
only still the same players, right? That's why we need more banks in the game, right? So that we can have more.
Maybe we should.
Nice.
Maybe we should.
Yeah.
Maybe we should, definitely. Marta, I take it I have about 10 minutes, 10 to 15 minutes. Is that correct?
Yes, it's more or less correct.
Okay, I'll try to.
We always have a Q&A session, so maybe today Q&A session will be a little bit shorter.
Okay.
But please go ahead with your presentation.
Okay, all right. Let me try to be quick. I actually, after listening to all three speakers, I think I would like to focus on two themes actually. One theme is why, and the second theme is how. And I would like to leave the introduction of my organization with a few slides to the second point, to the how, and then tell you also a bit what indeed we are doing and why, and how we're trying to proceed there. I was for the why. I was actually both inspired by Mr. Sazia's talk about the ethical side, as well as by what Mr. Gruzinski was telling about the challenges that are there for large banks, and maybe even the burden to get to get done with regulations and try to have all the companies that you're servicing to have them also comply with the regulations. So I definitely recognize that, and that's why I think that the why question is actually maybe a very important question. It's certainly a question that helps us thrive a change in our bank to really understand why we have to do this. Because if we're clear about the why, then actually the regulations become more of a support than anything else. So, well, my former slide actually, to start with Mr. Sazia's plea for an ethical view on banking, I started here with a yin and yang sign of heart and mind. And I think people in the impact world recognize this, that it's always a choice between heart and mind. But I would like to maintain today that it's not definitely a choice between mind and heart, but especially what is happening in many markets at the moment is that more and more companies see a combination of this mind and heart. And let me try to explain how that works and why that works. So if you look at the why, so there is the ethical side, and I think the ethical side goes beyond the heart and goes beyond feeling well. This is about shared value. And shared value is a concept that I think Harvard University has been pleading for. And it's about that we recognize that a value is not only in material world and the stuff we can buy, but value is first and foremost in what we do together and how we try to save our planet. So this knowledge of shared value means that this can also be valued. And if we're talking about a marketplace where we do business, we could also think about the value of us as people and about saving our planet. And that sounds like heretics in the world of philanthropy. But if you come to think of it, this combination of doing business and doing good for the world is actually quite interesting, because there's fantastic business models, and we have seen that grow over the past 10, 15 years. There's fantastic business models that start with a social goal and then do that in a profitable way. And that is, I think, the main reason why actually we can do it. And again, then regulations actually become more of a support. Now, and why should we do it also? I think the second reason is not only the shared value, but there is an urgency. There's an enormous urgency. And if we can flip to the next slide, maybe, Eva. This urgency actually is all around us. This urgency is at least in 3 areas. And of course, we have the SDGs with 17 goals and I think 225 sub-goals, KPIs behind it, etc. But there is really urgency in climate, in the problems we have with our climate, in the energy transition. Can you go one back, Eva? Thank you. There is urgency in the energy. There's urgency in circularity, in depletion of our resources, and there's urgency in the social transition. This has been mentioned a few times, and Johan will like this as well. There is urgency there. The urgency, and I'll give you 1 or 2 slides for that, is also both a thing of the heart and of the business. Because if there's urgency, then there usually is business. If there's urgency in the economy, then there will be gaps in the market, so to say, and there is room for business. Well, let me just quickly show a few reasons why this urgency is so high. This slide is just a tell-all slide about the refugee issue that we have been having for the past years. Again, we have had it already for years, but it has come to the forefront. And this is, this is a mirror of what's happening in the countries where these people come from. Just to remind you of this is a crisis of the whole world. This is a crisis of inequality. This is a crisis of hunger. This is a crisis of conflict. This is a huge crisis behind the refugees. The refugees is only what we see in the West. Maybe next slide. The next slide is about poverty. There is huge poverty. There is 800 million people living under the poverty line, even 100 million in the OECD countries, in the Western industrial countries. Next slide. And this one I particularly wanted to show you, actually, because the people around this table all are convinced maybe about this urgency. But this one I've come to like very much, because the climate we all understand. There's a lot of companies working on that. Circularity, we're learning to understand. But the social urgency is sometimes not recognized also as an economic factor. 30, 40 years ago, well, in my age, I was already on the barricades for climate change. I belonged to that group, but it was a front-running group. And it took us 30 years before climate now is a mainstream thing. I would hope that food will not last 30 years, because this world in 2, 3 decades, 3, 4 decades, has a shortage of food worldwide. That is a crisis that is waiting for us all, and it doesn't have much attention from the mass media, so to say. But it's a crisis happening. If we are not acting now, we will have a world food problem in 30, 40 years that goes beyond the problems we already have in many developing countries. And I hope really that this time we don't wait for 30 years before we address this issue. So food and the agricultural sector There's a lot of business going on there. So this is an exact example of how your social courses and your business courses go together. And the same is for the next slide. That's our faltering health systems in the West and the less complete systems in developing countries. Okay, let's now, because of time, switch a few slides because I hope you understand what I mean here by saying it is urgent, but it also gives business opportunities, because I think a next role for banks is to do this. The reason to do it is that banks are central. Maybe next slide. Banks are central in the economy, whether we like it or not. Banks are in the midst of the web. So that means that we have a responsibility to pick up this urgency, to pick up these challenges and to do something and to help our clients. We have that duty. On the other hand, we also have the possibility to do it by changing our businesses. This is, I hope, in one glance, ABN Amro. We used to be the 8th largest bank worldwide, very large bank. And then we got into trouble in 2008-9 when we were taken over by 3 other banks. And we ended up with a much smaller bank, but I think we're still one of the leading banks in Europe, and we're still one of the largest 3 banks in the Netherlands. There's some figures here. Our total loan portfolio is about 270, 280 billion. Our total, which is not here, real estate portfolio, I mean, that's the clients that we represent 300 billion in real estate projects in the Netherlands and internationally in Europe. So it means that we can make a change if our company is changing. Well, we're trying to do that. Maybe to the next slide. So we are a mainstream bank. That means that we do large businesses, international businesses, that we do small and medium-sized businesses, and we have a lot of private client banks and retail. So we are a universal bank, we're a mainstream bank, and so we have that central role in the Dutch economy, but also to a large extent in some of the other countries where we're still active in Western Europe, Germany, Benelux, France, UK, Scandinavia, Southern Europe. Of course, we're still active in Asia as well, in the US, but much smaller than we used to be. Now, what has happened in our organization? And I think this is the how question. Maybe Eva, you want me to go faster, but I need the former slide. Maybe you can go back to that slide. The bank has been working on sustainability for 25 years, but it was like more of a fringe thing. We started that yes, we have to be more responsible, and it was visible in the fact that we changed plastic coffee cups for paper cups and later for mugs. But we have come a long way, and particularly in the past 10 years, I dare say that we shifted from sustainability as something we also did to sustainability becoming our core strategy. Only 3 years ago, it became part of our core strategy. Now sustainability has become core strategy. And this slide shows it. We are covering the SDGs. We're trying to match most of the SDGs, although we have 3 SDGs as our examples. And we do that in different ways to our clients. It has really become part of our strategies. And we focus on these 3 transitions: the social transition, the energy transition, and the circular transition. And we're increasingly trying to do that in all our business units. And that has also becoming more and more expressed in KPIs for our businesses. So my fund, the ABN Amro Social Impact Fund, was one of the first things we were doing in the bank that stepped outside with investing in social enterprises. At the time, 10 years ago, that was innovation in the organization. And I belonged also to the people that really still have to put up a big fight to be able to launch the fund, and also to get the fund supported by other departments. And our role was also being built a bit to bring the outside world to the bank through our fund. So we were a bit of a two-sided ambassadors. But a lot has happened since then, and I really dare say that more and more departments are really embracing it. But we're not there yet. And in the beginning, I said that the regulations can be of help. And in fact, in the ongoing change of our organization and winning more and more of the departments over to also doing things in sustainability, the regulations are actually a big help. The EU taxonomy we're really discussing now with all of our clients. And indeed, the departments that are not so quick, that have only started to change to sustainability vision, let's say 2 years ago, and we have those departments, they have a burden to carry because they have to go to their clients now to make sure that we fulfill the demands of the EU taxonomy. But other departments are already further ahead, and they have already talked to their clients, and they can also work with clients. Our funds, and I like the examples of that Johan gave very much, but let me give you one example of what my fund was able to do, and it's just really an example. We have invested in a company called Scope Insight, and you can also Google it if you will. Scope Insight assesses farmer organizations in developing countries, and they come from the let's say tradition of certification of farmers to be more sustainable. But they found out actually beyond certification there was a lot of lack of information. In many developing countries there's a lack of information. In Kenya even, which is one of the more developed countries, I think would say in Africa, they don't really know how many farmers there are, let alone that they understand on the micro level what is needed to get farmers into development or speed up that development. Scope Insight is able to assess individual farmers as well as corporations, etc., with development software-based tools like a rating agency would do. Well, this company, I will not go too deep into the company itself, but this company over the past 5 years has reached 15 million farmers already, 15 millions that have done their assessments, and they're reassessed every few years. So they can really see what progress these 15 million farmers are going through. And of these 15 million farmers, they know that 90% has actually been able to increase their production with 80%. That is quite a lot. And think of the impact they have made. Suppose if even one farmer has increased, his production with €1 per month. That means that these 15 million farmers, or at least these 80% farmers, they have an increase of 150 million in impact, in fact. So the impact of this one company, Scope Insight, which is run by 10 people, their impact is 150 million euros per year and that's a very conservative estimation of a production rise of €1 per month for a farmer. So you can just guess what the impact can be. This is just one example. And I can give you other examples, and this is what the bank is trying to do. The bank is trying to find companies that we can support by credit, and we're trying to find companies that we're doing investments in, like I do with my fund, on the equity level. And now, of course, I took this example because it's a nice example, and there's also a company with less impact. But just imagine, because we own 33% of this company, which would mean that we, with our money, because we have really invested money in this company, that we have contributed to this 150 million per year in impact. That means with our million investment that we did $1 million in investment, we actually helped 50 million if we did 1/3, Of course, it's not one-on-one, but it's just to imagine how much influence a bank can have through what we do with our clients, with our investees, with our loan portfolio. So this is what is driving ABN AMRO, and these kind of results help also the motivation within the organization to go on and on and on. I'm also chairing a monthly meeting of the departments that are involved in social enterprises. And we started with 3 departments. Now we're with 12 departments across the bank and across the business units. And this is just a mirror of how the bank has now officially said that sustainability is part of our core strategy, or is course, but also we still have to maintain the revolution. We still have to maintain our evangelism to also get the support of the die-hard traditional bankers who still think that sustainability is an add-on and is a burden, and that we have to do all these regulations. We have to follow our heart, but we have to follow the possibilities and the opportunities that we see coming towards us. I would like to end for now because I did 15, 16, 17 minutes already. So Eva, thanks for the slides. I will leave the rest for the viewers to look at the slides themselves and try to understand what's on the slides. Thank you.
No, but I think we can continue because we don't have questions from the audience actually. And I was listening to you. I have a list of questions myself, but I think this is really for a separate conversation, you know. I mean, the same to Johan. So I'm planning to invite you again so that we can talk.
All right. Okay. Now, so if I get to pick,
continue with the slides.
Maybe because I actually incorporated the next slides a bit in what I was saying, just to make a bit of speed. So I would just do this is a way to give some vision or some image, because I know some people are helped by having images in their mind. That social enterprising is really a way to change the world. And it's not only the social enterprises in a narrow way, but it's also social enterprising within large organizations. If we're willing to see the opportunity, and we're willing to see that your money goals, your commercial, your financial goals go hand in hand with your social goals, and that is what social enterprising is about, then you can actually make money out of your social courses. That's what I wanted to say with this slide, but I already made the argument. But again, you know, this slide combines, you know, a working person's hand with the money. This is what we should be doing. Social enterprising, just like microfinance. I heard also Johan talking about that, I believe, is about empowerment. Shared value is exactly what I mean, is how the social value and the financial value, you know, help each other to propel. And really, this business model of the example I gave you, this Scope Insight, is an example. They are really going for these farmers' development, and they make a lot of profit as well themselves. So next slide, for instance. So this is what shared value, I think, is about. And please, you know, for all the listeners and viewers, look at Google Harvard, Google shared value, and see what that means and how large corporations can help. This is an example of what ABN Amro is doing, and maybe for Mr. Gruzinski also, to just as an example of what comes after complying with the regulations. And I see this as a reward. This is a very complicated slide, but let me just tell you what's happening on this slide. What we think is very important in ABN AMRO is that we are able to show the impact that we make. And then we don't only mean the positive impact, because I can just be very proud that we have helped 50 million in developing countries. But there's two things happening. I also need to show at what cost that happens. For instance, if I'm selling fair trade chocolate, I want to make sure that I didn't only liberate the children from slavery, but I also doing this in a sustainable way. So there's always also cost. A company can be positive impact, but there's also costs, externalities. So what we're trying to do is weigh both the positive impact and the negative impact of a company, and we try to measure it both. The only way to compare that well is by trying to monetize it. So we express that in euros, and then the next step is to start reporting on it. What you see here, especially in the lower part of the slide, and in this this table on the right side of this graph with the bars, ABN AMRO has started from 2018 to do integrated reporting and integrated profit and loss, where we do not only show our financial results, but we show also our P&L on social, on environmental issues, and a few other indicators we use there. On 6 capitals, 6 P&Ls we show. And here we're showing the diagram below shows the flows of money. So if you take the flows in the middle of that picture, then the thick ones are the production flow and the financial flow. And you see we're making quite a good flow there and good profit. And then the thin lines there are, unfortunately, this is of the bank, are what we do on sustainability and on the social side for the bank as a whole, as a company. But we have started to report on it, and we see that it's still very thin lines, because this has also to do with the system. And I agree with Mr. Guzinski that it's also the market that has to change. In fact, the ecosystem has to change. But again, I think that the banks are central to that ecosystem. So these lines, we see it as, yes, they're very thin, and we should be able to increase the social impact we make, the social impact we measure, and the social impact that we then integrated reporting. But this slide gives you management information. The moment we started to measure it and report it, we have management information. And even though this may not be very accurate, we know there is a job to do. So this helps in incentivizing the managers in our organization to come up with even better products, to integrate in our advice with our clients, with our conversations with our clients, in the interaction with our clients, in the sort of products that we launch, how important it is to increase the impact that we can make sustainably and also social, so that in a few years, these lines will be thicker, so that the bars in the diagram will be higher. So we see the measurement and reporting as a management tool to actually give feed to what we should do in our policies and in our products and in our conversations with clients. And I would like to go one step.
Yeah, I'm afraid that
now you have to stop. Now I have to stop.
Unfortunately, yeah. Because we are running out of time. But there was one question from one of the participants. Are you using Seraphine's approach?
What are we doing? Sorry?
Are you using Seraphine's approach? I don't know what it is, but there is a Seraphine.
Seraphine. I'm not sure what that is. Sorry for that.
I can check with David, who's one of our participants, what it is exactly. So yeah. So, but I think we really, unfortunately, we have to finish.
Yeah,
so,
I can imagine.
Yeah,
I can imagine. I already feel I've spoke far too long.
No, but it's always the situation that it gets more interesting towards the end. So we will share the presentation with the participants, of course. I'm just clicking quickly through slides so that we also have them on the recording, because that's also important for people that will look at it later on. So thank you so much for all our speakers for joining this webinar. We will be making the recording available. It will be probably after there is a long weekend in Belgium, which I didn't realize, and some other Western European countries as well this week. So we will make it available next week. Thank you so much for joining. I really hope that next time we will be able to meet in person, because for every presentation, I felt like I have a couple of questions, follow-up questions. I think all of you could have a really interesting interaction as well, because there were very interesting, sometimes provocative thoughts as well. So thank you so much. Stay healthy, and I hope to see you in person sometime soon. Thank you.
Thank you very much.
Thank you very much from my side as well.
Bye.
Thanks.
Bye.
Bye.